And let's also welcome on board Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Sudeep, hi. Thanks so much for joining us on the show. My first question to you is on the entire telecom space and everything we're seeing happening with Vodafone on one hand. On the other side, you have Bharti Airtel that is sitting at a fresh lifetime high today. What are you making of this space, especially after the minister's comments that we've got today that they prefer that the Indian telecom market is not a duopoly? So what's your take on that?
I think the statement is definitely a welcome development from a Vodafone perspective. But I think we have seen too many flip-flops and too many things changing as far as Vodafone and this entire AGR due related issue. Now, yes, of course, conceptually, we should not have a duopoly and we should have more players and competition. But the reality is Vodafone has been suffering for a very long time. And beyond all these dues, operationally also Vodafone has not been performing well. They are still losing customers on a monthly basis, and that definitely points out to operational weakness. Yes, the rate of loss of customer on a monthly basis have come down, but the fact remains that they are still losing customers, and that is definitely is not a good sign. Of course, the balance sheet needs major amendment, major mending, because even by end of this year, their AGR dues, unless something is done, is about 16,000 crore. And there is no way Vodafone can pay this amount through internal accruals. So they need either a waiver or a postponement by the government or some kind of major fund infusion, because bank loans are very difficult for them to get. Under the circumstances, Vodafone still, to my mind, remains a speculative stock. And if one has to play the telecom space, they should look at Bharti Airtel or Bharti Hexacom. Both are doing well and definitely good buys. Even if you look at the last price hike, which the telecom companies took, the biggest beneficiary has been Bharti Airtel. The flow into the PNL has been best for Bharti Airtel. So one more hike is expected during the current fiscal. And again, that should benefit disproportionately Bharti Airtel. Under the circumstances, that's one stock one should look at.
Sudeep, we have seen a lot of these new regulations coming into play with respect to the life insurance companies. And other than that, insurance as a whole, they are also undertaking a big campaign when it comes to the life insurance side of the business. Give us your understanding on the insurance pack. How do you see the things moving from here on? Because everyone just talks about the kind of big opportunity size of growth for these insurance players, but a lot really has to come into the numbers as well.
Insurance is humongous and we're just scratching the surface. But the reality is, as you rightly said, these haven't flown into the numbers of the listed companies at least. And under the circumstances, one has to take a slightly long-term view if you are investing in insurance companies. Life insurance definitely is a sector which has got significant potential, and amongst the listed companies, I would say LIC definitely merits an attention. Multiple factors. While the performance hasn't been anything great in the recent past compared to private peers, the fact remains that the potential is huge, and the fact remains that things have started improving at LIC's level, and valuation-wise, it still definitely seems attractive if you compare with the private peers. So LIC from a long-term perspective definitely can be looked at. One can look at SBI Life as well, and to our mind, SBI Life also offers value for money opportunity at this stage, considering the strength in bank assurance and the strength of channel business as far as this insurance company is concerned.
So that's the take on some of these insurance names from Sudeep. But Ruchit, we'll come to you. Give us a chart check on MCX. It's a stock that is outperforming the breadth of the market today, looking very good. And this is on the back of a UBS note wherein they've maintained their buy rating, but they have hiked the target price to 10,000 rupees from 7,000. That's MCX is the stock that I'm talking about. Ruchit, what's your view on MCX and 10,000 as a target price? Do you concur with this?
Yes, so it's not just in today's trading session, but if you see last couple of months, I think the stock has done remarkably well from a low of around 4,600, 4,700 in the month of April. Prices have rallied towards 86, 8,700 today. So it's a gradual up move which is going on, and the volumes are still good in today's trading session as well. So even after this up move, if there are good volumes, it clearly indicates a buying interest in the stock, and that should lead to the prices further higher from current levels as well. The support base for the stock immediately would be seen around 8200 to 8250 zone. So if any existing long positions are there, I think it's good to ride the trend and keep a trailing stop loss method. On the higher side, 9200 to 9000, I think these are the short-term levels which can be expected on MCX.
All right, so that's about MCX. That is doing pretty well. But the other stock within the MS space that is not doing that well is Dixon Technologies, because of late we have seen the promoter selling the stake in this one. And Sudeep, there's always a chatter about the higher valuation the stock has been commanding. Here too, the growth opportunity is large, and not just that, the companies have delivered indeed in that sense. But the sort of a U-turn that the stock is making off late and the promoter selling, what do you make out of it, and what is your advice for the investors who have bought at the lower levels?
A couple of things. One is, promoter selling a small stake for, there can be multiple reasons why he's doing that. I don't think we should read too much into it. But the fact remains that, when a stock is quoting at such high multiple, little bit of selling by promoter or some selling coming from some quarter does have an effect on the market price, and that is pretty much what is happening. So yes, the valuation is not cheap, and it is definitely richly valued. So investors should exercise caution while buying Dixon at these levels. But having said that, I don't think we should read too much into this movement, which predominantly has been triggered by promoter selling.
Okay, so that's the take on Dixon Tech. Let's move away from that and talk about some of the sectors that are not doing all that well in today's trade. While all the sectors are comfortably in the green, you have names like PSU Bank, banks which were the winners yesterday. They're looking a little weak right now because just a 0.2% uptick is what we're seeing on both of these counters, PSUs and Nifty Bank. This is followed by Nifty Energy, Metal and Realty. Rajesh, what's your take on the real estate segment? Since we last spoke about it, a lot has happened. There was a point where real estate was leading the market gains for a good couple of weeks, and now it has simmered down. Any hope of a resurgence in this sector?
So still after a strong rally, most of the real estate stocks are now consolidating, and looking at the overall structure for Nifty real estate, I think still strength is there on the near-term chart. Maybe some consolidation we may witness in a tight range. But looking at the near-term, short-term structure, we believe that Nifty Realty Index is very well placed above 20-day moving average. And looking at the setup, I think we can see a breakout about 1035, and once that breakout happens, really can extend towards the 1080 kind of level. From that space, I think Oberoi Realty is looking very interesting and promising. The way stock is comfortably holding above all its important moving average. There is a breakout on the weekly chart after a long consolidation. So looking at the breakout for Oberoi Realty, we expect this stock may exhibit good amount of rally going forward. Possible target 2150, 2200 we could see in the near-term perspective. Keep stop loss towards 1950. Again, DLF is also consolidating and holding the support area. So DLF is also looking attractive. One can buy this stock also with stop loss of 835. On the higher side, on a breakout above 875, this stock can extend its gain towards 930 to 940 zone.
All right, so that's about select counters within the real estate pack. Let's watch out for that. But Sudeep, the other sector I wanted to touch upon is the cement pack. Help us understand which are your top favorites within the cement counters, because of late the pricing momentum is at play. The demand is not that bad as well. And the other factor is that the crude oil prices in the international market, they're actually trending lower. What do you make out of these triggers in place, and where will you place your bets?
Well, I've been positive on cement for last almost a year, and I continue to maintain my view there. Look, this quarter may not be anything great as far as cement demand is concerned because of the monsoon impact, and that's a historical fact. But by and large, I think the demand in the economy of cement is going to keep going up. The government is committed to spend about 1 lakh crore plus per month on capital expenditure in terms of the last union budget. And that does help the cement companies because incremental infrastructure and building demand leads to incremental demand for cement. So yes, the demand for cement will go up, and that will give the existing players an advantage on the pricing. So the pricing power is coming back. Demand is going to be there, and what has happened is the cost structure has become extremely attractive because the cost has become much more manageable than what it was. Let's say a couple of quarters back. Coking coal prices may go up in the near future, but that I think is already factored in. So cement companies will have a bright future. We do like the leader, which is UltraTech Cement, from a long-term point of view. Even companies like Shree Cement can be looked at current levels.
Those are some of the stocks from the cement space that Sudeep is liking. But Sudeep, what are you making of the entire travel and tourism theme? It's something we haven't spoken about in a while. Today, you have a note coming in from JP Morgan on Indian hotels, wherein they've initiated an overweight rating with a target price of 890. Now, you also have another big player that's in the listed category, that's ITC Hotels. Sudeep, if you had to place your bets between these two, IHCL and ITC Hotels, where would you be placing your bets?
Well, I will definitely go for Indian hotels. I think it's got a much wider coverage and much more focused company. So definitely Indian hotel will be my bet. But one has to remember that these are long-term targets. Valuation is not cheap. It is actually full. And if somebody is buying at current level, they should have 1 year plus time horizon in mind. One other hotel company which I'll definitely advise the investors to look at is EIH, which runs the Oberoi and Trident brand of hotels. I think their performance during the last quarter was good. And the way the hotel industry is poised, travel and tourism is poised, I think they will continue to do well. I think both EIH and EIH associated hotels, more on EIH Limited is what I would recommend the investors to look at.
All right, so that's about the hotel counter. So just a few minutes left before we shut the shop for today's trading session. What is not doing well is, of course, select defense counters, select ship related counters, which have done pretty well in the last 1 week or so. And along with that, stocks like Dixon Technologies, HAL, they are also trending lower. On the flip side, it's select IT counters that are holding up well. Select pharma and auto ancillary counters as well. They are inching higher in today's trading session. And the other stock to watch out for is actually India Mart, because we all know that there's been an upgrade coming in from Nuvama today, and the stock is trending higher with now holding to 6.5% of gain as we speak. But Rajesh, just wanted to have a chart check by you, because a strong move coming in on India Mart, but this counter is indeed one of those volatile counters which gives very strong moves one way. If somebody has bought these at lower levels, what's your take on this after the 6.5% move? Good time to book profits, or the rally has just started?
I think there is a fresh breakout on India Mart, and looking at the breakout, I think one should trail stop loss instead of booking profit, because this rally can extend further. The fresh breakout on a daily as well as on the weekly chart is clearly indicating that a rally can extend towards 2750 level in the continuation of this up move. So at this juncture, we would advise to trail stop loss towards 2610 and hold the position for upside target of 2750.
That's the levels to watch out for on India Mart. Sudeep, given the kind of run-up that we've seen over the last 2 trading sessions, we've seen quite the exuberance coming in across certain sectors and stocks. Despite this, as we head into expiry and even for the near to medium term, where are some pockets where you're still seeing valuation comfort?
I think chemicals and specialty chemical is one space where I think there is still some valuation comfort. The sector was bombed out and they performed very badly over the last 7-8 quarters. But things have started improving. The stock related issue has got resolved. The China Plus One logic continues to remain strong, and companies have tightened their belts and improved their internal efficiency significantly. So I am positive on chemicals and specialty chemicals, and pretty much all the leading players here, SRF, Aarti Industries, can be looked at. The other space which is interesting is the defense and defense-related smaller private companies where focus hasn't yet come that much. And I would like to point out Raymond because after the demerger of Raymond Lifestyle and imminent listing of Raymond Raymond Realty, the Raymond Limited is pure play aerospace, defense, and specialty engineering company. And valuation wise, it has still not reached the stratospheric levels which we have seen other defense and precision engineering companies reach. So there is still some valuation comfort, and it definitely is worth looking at.
All right, so let's watch out for those counters as well. But yes, today has been a good day for the markets overall. And select counters that has done very well, case in point being KNR Constructions. Just wanted to have a quick chart check by you, Ruchit. What do you make out of this strong move? Because today the stock has come out with an order inflow, I believe.
Yeah, I think if you see last half an hour, I think post this order inflow news, there has been a good price volume action on the stock. Also, it has found a good support base around the recent swing lows of 205 to 210 range. So I think we could see a follow-up move in tomorrow's trading session as well, and 242 to 245 can be expected in next 1 or 2 days.
That's the view on KNR Constructions. Only a few minutes left before we wind down for today's trade. Rajesh, give us a sense of us heading into expiry immediately tomorrow. Where do you expect the market to open?
I think it would be on the positive side, and possible up move can extend. And expiry would be around 25,300 plus minus 20 point should be the expiry for Nifty, as we are comfortably trading about to 25,200. So positive opening is expected for tomorrow also.
All right, so positive opening is expected for tomorrow. But Ruchit, which are the levels that you are working with?
So then 25,150 to 200 would be seen as a very crucial support tomorrow, just for a day's trading session. And on the higher side, 25,300 is where the call lighting is seen, and hence that would be the resistance. But as we said it earlier as well, that this remains a buy on dip market. And any kind of intraday dips if we get, then that should be used as a buying opportunity.
Okay, so that's the take on the levels to watch out for. Rajesh, tomorrow, very quickly tell us, where do you expect outperformance, if at all, in the market, the broader end or the benchmarks?
I think automobile space is looking promising. So I think this space can be looked at for tomorrow's session. A lot of stocks are showing good traction. So from automobile space, I think stocks like M&M, TVS Motor, these two stocks are looking more promising. Even Ashok Leyland. 3 stocks can be focused for tomorrow's session.
All right, so those are the stocks that one can really look out for. But moving on, after receiving the SEBI approval for monthly electricity futures, NSE plans to apply for quarterly, yearly and CFD products. Anjali Palod spoke with Dr. Harish Ahuja of NSE for more on this. Listen in.
Taking a learning from the spot market and taking what is happening on the spot side, we are the financial derivative instrument here. We have decided that we're launching, this is a monthly base load future where you already got the approval in principle approval in place. We are thinking to launch quarterly quarter plus 7 quarter ahead. So almost 2 years prices you will see. And then we'll come with the annual contract 1 plus 4 years, which is 1 plus almost 5 years. And we'll also launch in parallel CFD, contract for difference, because we believe contract for difference may make a lot of positive development in terms of attracting more and more capital expenditure or capital investment for renewable generation in India.
Right. And also there is another exchange that has received this approval, and while for the entire derivatives markets multiple players are now in electricity futures, how do you see NSE setting itself apart? So
first and foremost, we have into this market, the electricity derivative is not the product we are launching, let's say today or tomorrow. We are in the power market since 2008. Being the earliest promoter of Power Exchange Limited, we understand the nuance of the spot power market, physical power market, and we understand the public good aspect of that commodity because we were in that market. Secondly, NSE has the largest derivative volume in terms of, and like us, NSE index is the largest volume. For us, this price equation at which this is settling is again nothing but a kind of price equation given by Power Exchange of India Limited. So our niche position, our leadership position derivative is going to help us in terms of putting the right risk management practices, right margining and settlement mechanism.
Okay, so that's the exclusive conversation my colleague Anjali had with Mr. Ahuja of NSE. But on that note, we'll wrap it up on this edition of Closing Trades, and thanks all our guests for joining in.